Good afternoon and welcome to your weekly FX options report. Today is Wednesday, April 7, 2010. In midweek trade, the major U.S. stock averages are trading lower. Investors do continue to keep a close eye on global fundamentals. Since the European markets returned from the long holiday weekend, they have been digesting the U.S. jobs report for March as well as global manufacturing figures. Now, taking a closer look at the March jobs report in the U.S., we saw that non-farm payrolls improved with the economy adding 162,000 jobs. The unemployment rate in the U.S. was unchanged at 9.7% for March. The average hourly earnings fell by minus 0.1% from the 0.2% in the prior month, and the average work week rose to 34 hours from 33.9 in February. Meanwhile, global manufacturing figures in the U.S., UK, Eurozone, as well as China came in better than expected. This week, central banks are in focus, and earlier this week, the Reserve Bank of Australia lifted interest rates by 25 basis points to 4.25%. And overnight, the Bank of Japan left interest rates unchanged as widely expected. Looking ahead to Thursday's session, both the Bank of England as well as the ECB will be announcing their interest rates. Now, taking a closer look at the spot FX market, the U.S. dollar is trading higher against the high yielders of the euro as well as the British pound. Euro dollar fell to an 11-month low in the New York session, touching 1.3325. The euro does continue to see downward pressures as ongoing fiscal concerns about Greece weigh on the currency. Meanwhile, in terms of economic data releases, Eurozone fourth quarter GDP figures were downwardly revised to a flat reading of 0% from the 0.1% initially reported. But the services PMI in the Eurozone came in better than expected at 54.1 versus the 53.7 expected. And over in the UK, the March services PMI slipped more than expected to 56.5. One way to trade your views on U.S. dollar strength or weakness is to take a look at IC's FX options. One advantage is that they are U.S. dollar denominated. For more information, you can go to www.fxoptions.com. And now taking a closer look at the individual IC FX option pairs, let's move on to your daily trend report. Let's start out with the AUX, which is the U.S. dollar against the Aussie. Now, for that pair, the downside does prevail. The RSI is badly directed, and the preference of trading central analysts for the AUX is short positions below 115 with targets at 106 and 102 in extension. And now moving on to the BPX, which is the U.S. dollar against the British pound, the upside does prevail. Now the pair is pulling back on its support ahead of a rebound, and the preference of trading central analysts is long positions above the pivot of 65 with targets standing at 68 and 70 in extension. And moving on to the CDD, which is the U.S. currency against the Canadian dollar, the downside does prevail. The RSI is bearish and calls for further decline. The preference of trading central analysts is short positions below the pivot of 104 with targets at 98.25 and 97.15 in extension. And for the EUI, which is the U.S. currency against the euro, the upside does prevail. The pair has rebounded on its bullish channel lower boundary and is approaching its resistance. Now moving on to the SFC, which is the U.S. currency against the Swiss franc, a rebound is expected. The RSI is supported by a rising trend line, and the pair should reach its next resistance. The preference of trading central analysts for the SFC is long positions above the pivot of 105 with targets standing at 108.75 and 110.25 in extension. Last but not least, let's take a look at the YUK, which is the U.S. currency against the Japanese yen. Now, the upside does prevail for that pair, and the YUK has also broken above its short-term channel upper boundary and should post a further up move. The preference of trading central analysts for the YUK is long positions above 90, which is currently the pivot, with targets standing at 96 and 97.90 in extension. Now in our next segment, we'll move on to your weekly trend opinion. Last week, the U.S. dollar rebounded against the majors, and Trading Central did take advantage of the temporary weakness to enter into new long positions. In terms of portfolio performance since its inception, which was August of 2007, it is up by 1,405.72%. And since the beginning of this year, it is up by 125.63%. Now, we do have two trade alerts for you, including the YUK and the GBP. For the YUK this week, Trading Central analysts do recommend calls. Now, an upside breakout of the key bearish trend line calls for further recovery. And in terms of the GBP, they are considering puts on that pair because it should strike against its resistance, and at the same time, the RSI does stand within a bearish channel. Now, looking ahead to next week, Trading Central analysts will be looking at the following pairs, including the CDD, the NZ NZD, the PZO, as well as the AUX. Now they will be looking at the CDD because it has broken below its strong support and should face further weakness. They are looking at the NZD because it is under pressure and currently challenging its channel lower boundary. And they are looking at the PZO because it is badly directed as it broke below its support. And last but not least, they will be looking at the AUX because it is under pressure and approaching support. Also, the RSI is badly directed. And that wraps it up for a weekly FX options report. Make sure to tune in next Wednesday for your latest update. Thanks for watching and have a great day.